Hi again, this is Rick with AmazingAccuracy.com. Today is July 6, 2016. It's currently 9:02 a.m. Chicago time. We're currently looking at the daily chart of the 30-year bonds. And the reason why I wanted to draw your attention to this chart is because of this F date that you see right here. This is a dollar sign F date compared to a regular F date. And for those not familiar with that, a regular F date is indicating that we have an 81% or higher probability of a daily swing bottom or top occurring within one bar. And you can see right here, we had this swing top, swing bottom occurring for this F date right here. That was the last action that happened in this bond market, was when we have this indication here. And now we have this dollar sign F date. The dollar sign indication is just an additional probability indication for us. In other words, with a regular F date being about 81% plus probability of this turn occurring, a dollar sign F date is actually higher than that. And usually it would signify more significant kind of turns. Turns that are a little more than just these small turns. For example, like, you have this move from here, or this move from here, or move from here, or from here. These would be good kind of turns that a dollar sign F date would often indicate, or they'd be strong moves. So we see that often happening with these dollar sign F dates. And usually what happens is I see a dollar sign F date, I usually take a much closer look at what's going on in that market within one day of it happening. So that's the margin of error, is one trading day. And so if you can see here, nothing happened on 7/5, and we know the 7/4 was a holiday, which kind of muddles the water for us because we have no idea what that would have produced. We can only assume it would have been another one of these higher bars. But today is only one day removed to 7/6. It's the only price bar on this chart now that could possibly validate this dollar sign F date. And so we really want to take a look at what's going on today because there's a very good probability that the market would confirm a swing top, where the market would go from a high and start correcting 1, 2, 3, 4 more days following confirming this type of swing top. So because of this, I looked at Fibonacci expansion ratios, for example. Notice that today's high, as the time of my taping this, the high is at Fibonacci 62% expansion, which is a really good resistance level. And it's occurring in the daily overbought zone, which is this green area you see here. The red area is the oversold zones, and this is an overbought zone. So oftentimes we would see good swing tops occurring in these green zones, and so it's good to see that here. We don't have any indication on the MACD, for example. Let me bring this down. We don't have any indication here other than the fact that it's pretty well extended in the overbought area, you may say. And we can see that the histogram has already declined for today so far. And if it closes like this and holds, and we have this declining here, this is a narrowing of these signal lines. This could be an early indication of further decline, because we can see that historically it often works that way. But it's not a really high prob indication. It's just something to take note. This is an ADX down here, and basically what I like to see here is that if we had a cross down on the MAC and we had a plateau and a cross, or this black line here starts to go down a little bit, then I would say that this bullish move is done for the short term overall. But we don't see that right now. So right now, this is just basically a high probability swing top where we could see 1, 2, or more days of a decline this week, and potentially into this next dollar sign F date. That's not a given that it will go all the way to July 12th down, but it could. This is just indicating that come July 12th, we would be looking for yet another daily swing, such as you see where my cursors have been pointing here. Or I could just plot it for you. For example, here's if you can see this little line here, these are all your swings that occurred in this market. Or I could do a 2-bar swing. Here's your major swings, like from here, 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 and then this could be another one such as this, especially considering that we have a $ F date there. Okay, so that's what we're looking at here. Now, another thing that drew my attention, let me move this camera back here. I may have been talking and moving my mouse outside the camera, and I apologize. Again, what I just finished saying is that, you know, here's a 2-bar swing here, 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 and then we could possibly getting one here because of the $ F date. Okay, hopefully I brought you up to date on that. In the seasonal data report and the provisions charting application that our premium members get to use, you can notice here that historically we got one direction here marked by these red boxes leading up to 7.5, and then the color changes to the blue here. Oh, that's, you probably can hear that thunder going on out there. We got quite the storm going on at the moment. It goes from the red to the blue. Now, historically, that's saying that it's usually bearish into July 5th, and then it goes bullish until around the 12th or 13th. But this year, this was bullish, so I just flipped the script and say, well, if this is bullish, then we may be looking at bearish for this blue zone, at least for part of it anyway. And then that brings us again back to here, that we could be looking at this being a pullback. So the bonds are not following the seasonal tendency, because if it was, it would have been bearish in recent days, as you can see here, and we would now be looking at a bullish run following the July 4th weekend. But that's, you know, well, we could still have bullish, but it's just not following the historical script here as far as leading up to July 5th. However, we're still at resistance, $ F date, overextended with a 1-bar pullback so far, if assuming it closes today like this. All indications point that we likely will have a correction for at least 1 or more days. And this seasonal tendency here kind of supports that, because it changes from one band of colors at 7.5 to a different band of colors here. And so that's what I would be looking for to likely happen. Of course, nothing's guaranteed, is that we're ready for another pullback. So we've had a pullback here from June 16th. We've had a pullback here from June 28th. And we have a potential pullback from today, 7.6, as it sits currently at resistance in overbought territory, with the potential of starting to get a little weak, as indicated by the MACD. All right, well, that's it for a quick recap of the bonds for July 6th. And thank you for watching, and I will see you in the next video.